Hi, welcome to this vlog. In this, we will explore how we can file the income tax returns for India, and this is specific to financial year 2019-20. So why we need to pay the income tax? It is a form of revenue for the government, and also it's part of the legality, like you need to file the income tax return and even pay the tax where required. And do we need to go to a CA to file the income tax returns? It's not mandatory, but sometimes you might need a tax audit where you need to go to a CA. And some of the cases are like if you have a business with more than 1 crore income, or if you have a profession and with more than 50 lakhs income, you need the tax audit where you need to approach a CA. If not, you can file it yourself. And why should you do that? One is it can be simple, easy, and by filing you will know more about the taxation laws, so you will have a better knowledge, and thereby you will get some better financial knowledge, so which can indirectly help you to manage your personal finance so that you can plan for better tax savings in the future. And also, even if you end up going to a CA, it's kind of trial run for you, and you can ask more questions with your CA, or even validate that they are doing it properly. And maybe you will get some motivation to make more money because you're spending much in paying taxes. So this should indirectly help you to get better money awareness, maybe better conscious spending in the future. So I guess you will improve your financial intelligence, thereby making better decisions, and hopefully in the longer run you will create wealth for yourself. But yeah, it's not so simple. So have some patience, curiosity, and be brave to go ahead with this process of filing your income tax returns. So what is a tax return? It is a form to report your income taxes, you paid the expenses to the tax authority. Note down that income tax India efiling.gov.in is the main website of the income tax department e-filing. So some of the things that you can do with this website is download 26 CAs, which is a report of all the taxes paid for your PAN. Like your employer might have paid the taxes for your salary, or the banks might have deducted and paid the taxes for the interest they have paid you. And also through this website you can pay your tax dues, and you can also file the returns through this website. And you can also check the status of your returns filing, and also you can go back checking the old financial year's data of your filing and download the acknowledgements or the forms for the previous years filed. You need to be registered with this website, which is a one-time thing where your PAN number will be the user, and it will also be associated with your mobile and email for the communication, where IT department will communicate with you as part of your e-filing, or at least some status of your filings. You might get some ads about the deadlines and all. And note that your PAN is also linked to your Aadhaar, which you would have done long back. That is also done through this website. So this is how the website looks, And on the right top side, you will see how to register yourself or even log in if you have already registered. And below that, there is a download section where IT return preparation software is uh, where it will list all the softwares you need to file the income tax returns. So you need to download the software, install it, and use it. And on in the left side, there are quick links, and which also lists like linking Aadhaar to PAN or ePay tax, where you will pay the tax through that link, or even eVerify return if you want to eVerify explicitly. Again, we will cover that at the end. So can you skip filing the income tax file, the returns? If you are less than 60 years of age and if your income is less than 2.5 lakhs in the last financial year, you can skip the filing. Similarly, if your age is between 60 to 80 and your income is less than 3 lakhs, you can skip. If your age is more than 80 years and income less than 5 lakhs, you can skip. Note that for these cases, the income number is calculated before deducting some of the tax saving things like chapter 6A capital gains, which we'll cover later. Also, suppose if you are in these age brackets and below those income values, but if you have one of these three listed as no SFT, like the SFT thing, which is a statement of financial transactions. This is a recent one and the income tax department added. So even though if you are below the limit for filing the tax of your age group, if you have deposited more than 1 crore in a current account or spent more than 2 lakhs for the foreign travel or more than 1 lakh for electricity in the last financial year, you need to file the income tax returns. Just an overview of what is tax, like top level indicates your income. So government, the IT department has based on your income level and all, they have a percentage of the tax defined. So that will be calculated on the total income you have. And for some brackets of income group, like more than 50 lakhs or 1 crore, there is something called surcharge, which is defined as a percentage on top of the tax that is calculated. Then for both tax plus surcharge, they define some percentage as cess, health and education cess. And in addition, if suppose you file the income tax returns after the due date, or you haven't paid any advance tax, like there is a concept of advance tax that we will cover later. If you haven't paid the advance tax on time, so there can be some interest also you need to pay. So all these four components is what is termed as the total tax that you pay to the IT department. So what is a financial year? So we file the tax for the last financial year. So now, if you're filing in December 2020, anyway, this is delayed because of COVID. Otherwise, it would have been before July. Normally, every year in July, you file the income tax returns for the previous financial year, which is from April to March. So if you are filing because COVID delayed filing in December 2020, we file it for the financial year from 1st April 2019 to 31st March 2020. So we consider the income in that period. There is something called assessment year, which is always +1 of the financial year. So when we file the income tax returns, we file it for an assessment year. So if we are filing for financial year 2019-20, we call it as assessment year 2020 and 21. So what are the tax rates at present? As we checked previously, like if it is less than 2.5 lakhs in a year, there is no tax. And if it is between 2.5 lakhs and 5 lakhs, we are discussing about those less than, like with an age less than 60 years. And if your income is between 2.5 and 5 lakhs, there is a 5% of tax on your income. For between 5 and 10 lakhs, there is 20% tax. Note that when you say it is 20% between 5 and 10 lakhs, then if your income is 7 lakhs, it doesn't mean that you have to pay 20% on 7 lakhs. It actually means that whatever amount which is more than 5 lakhs, like for 7 lakhs, it's 2 lakhs. So you pay 20% on only 2 lakhs. Whereas for the amount which is less, like till 5 lakhs, so the 2.5 to 5 applies. That means for 2.5 lakhs, you don't pay anything. And for next 2.5 lakhs, which is 2.5 to 5, you pay 5%. And above that, like say, so overall for 7 lakhs, you will pay the 5% for 2.5 lakhs and 20% for 2 lakhs. And the surcharge amount is like if your income is more than 50 lakhs till 1 crore, it is 10% of the tax. If it is 1 to 2 crores, it is 15%, 2 to 5 crores, 25%, 5 to 10, 30%. And the cess is 4%, which is on top of tax plus surcharge. And this link below gives the latest whatever is shown about the tax rates. As I said, it is less than, like these numbers are for those people whose age is less than 60 years. And for like the surcharge does not apply same like whatever is defined there on all types of income. So if the income is not the capital gains, like non-capital gain kind of income, the above table surcharge applies within that 50 to 1 to 2 crores, you know. Whereas for capital gains of more than 2 crores, the 25%, 37% doesn't apply, instead only 15%. For the capital gains component. This is just an example. As I said, like for 5 lakhs, if your income is 5 lakhs, then it's only 2% of the 2.5 lakhs, which comes to 12,500 as the tax. If it is 5 lakhs is your income, then 12,500 is for 2.5 lakhs. Like if it is more than 5 lakhs, then 12,500 is for till 5 lakh. Then above it, 20%, whatever is above. Like if it is 10 lakhs, then it is 1 lakh 12,500 is the total tax. So then, yeah, if there is surcharge, you will add it. Otherwise, it's just a tax, and you apply the cess, which is 4% of the tax plus surcharge, and you combine everything, that is the total tax. So what are the main steps that we are going to cover? First step is collect data, like about your income, savings, which we can deduct and all. Then the tool, we will download the tool and fill the data, and then the tool will calculate the tax that you will pay if you haven't paid already, and then you submit to the IT department. So in the collect data, first thing is Form 16. If you are a salaried person, you will at the end of the year, you will get a form called Form 16 by your employer. That will have all the details of the salary that was paid and the deductions from that salary, and how much tax is deducted and paid to the IT department for your plan. So that is known as TDS. Then collect all the bank statements for all the bank accounts that you have. This is just to track the important transactions that is relevant, like get the savings statements so that you can find out all the savings interest that bank has paid you, and also find out all other incomes that you might have, like pensions, the dividends, and also if you have made donations, for tax deduction or any hand loans. This will be important for defining your assets. That only applies, that will cover later if your income is more than 50 lakhs. Then cash withdrawals and all, just track your cash transactions, even though you won't report any of that. Then FD inquiry statements for your any FDs that you have in the banks. And that is to get how much is the bank interest, FD interest that you got in last financial year, and how much TDS that bank has deducted and paid to the IT department. Then about house property, get the details, like if you have let out if you have house property, and if you're staying in that property, then maybe any loans information to claim tax benefit, or if you have let out, then how much rent you are getting and the details of that, and if you have, and then you should have paid the property tax so that you can deduct that from that income. Then download the 26AS, that is a tax credit statement. So whoever like your employer or the banks have deducted the tax for you while paying the interest or the salary, they would have paid the tax for your PAN. So 26AS will give all the details of the tax payment to IT department for your PAN. So you can download that from the income tax department e-filing website. So log into the eFile website, then go to My Account at the top. Then there will be View Form 26AS, and then you can download the PDF document of your 26AS. So once you have it, cross-check the TDS deducted and paid for your PAN. You will get the details. Cross-check whether it matches with your Form 16 for your salary, how much tax deducted and paid. Also in the FDs statements, whatever tax deducted, it's reflected in 26AS. And also, like if I think there is a limit, some 50,000 or something. If rent is more than that, the tenant has to deduct the tax and pay it. Suppose if you have let out for a company like the bank, normally they will deduct TDS and pay it. So cross-check those things. Also, if you have any tax refund last year, cross-check for that also. And also for the SFT report, as I mentioned earlier, about more than 1 crore in a credit in a current account, or more than 2 lakhs for foreign travel, or more than 1 lakh for electricity bill in the last financial year. That is only like if your income is below the limits for filing, and because of SFT you need to file the returns. And if you have stocks, and if you have capital gains related or loss related to that, download the stock statements from the broker where through whom you are operating your trading account, so that you will get a tax like the profit loss statement last financial year. Also, if you have stocks outside India, like if you work for an MNC and if you have stocks, like restricted stock units from your employer, get the details of the sales you have made, and maybe wire transfer information when it is converted to Indian rupees, when it comes to your account in India. And also you need to have the details of all the vested shares of your RSUs as on 31st March, but you haven't sold. So this is needed for an assets schedule, which we'll cover later. So assets, if your income is more than 50 lakhs, you need to declare all your assets. So there is a schedule AL that you need to fill. So if you are in that bracket, please keep track of the information, like the buildings, how much you have invested in those buildings, the lands, and jewelry that you have invested, how much, basically the gold and all. And, vehicles, you have like how many vehicles, like many investment that you have made. These are all not the current values, but the initial investment you have made while purchasing. And what is the cash in hand, and the amount in bank through savings FDs and all, and also the assets amount through stocks and MF that you hold, and also in insurance policies, and also finally the loans and advances that you have. Yeah, this is basically assets and liabilities that you, the information that you need. That's what AL is, schedule AL. So cross-check all the summary of the data, like the salary income that you have, non-salary income that you have, like the housing property, like rent, capital gains losses for stocks, mutual funds, and the dividends, bank interest is BFD, pension, annuity that you're getting, and the assets information. Then the step is prepare and submitting. So first step is, so ITR is the income tax return forms. There are 1 to 7 forms. So you need to decide which one applies for among ITR 1 to ITR 7. Then there are tools in income tax website specific to each ITR form. So you download the tool for that form along with instructions. Then you install the tool, fill the details in the tool. Based on the what tool suggests you to pay the tax, you pay it. Then you upload the details that is prepared through the tool to the IT department e-filing website, and there is an option to verify it. So this is the overall process. So as we saw previously, like in the e-filing website on the right side, download option is there. There is IT return preparation software. If you click that, it will give you all the ITR 1, 2, 3 to 7 forms list. And when you download the tool, it will be a zip file that you need to extract. It's a compressed format. So you need to uncompress it, extract it into your directory or folder, and then invoke the tool and run the tool. For most of the people, ITR 1 applies. Like if you have a salary from an employer, just the salary, you will use the ITR 1. Suppose in addition, you also have one house, like income from one house, or you might be staying in that house or later. So that is covered in, that is also covered in ITR 1. So in ITR 1, even like any interest from banks. So overall, if your income is less than 50 lakhs with income from either salary, house, or interest, even like the pension also is considered as salary. So you will use ITR 1. If your income goes above 50 lakhs, then you jump to ITR 2. Even if you have more than one house also, like maybe you're staying in one, let out one, another one, you use ITR 2. Or if you are holding a position of director in any company, you will use ITR 2. Suppose if you have a business, then you jump to ITR 3, and also depending on other cases, you will use 4, 5, 6, or 7. But most people fall into ITR 1, like the salaried people. So in this slog, we will cover mainly ITR 2. And before downloading, you should select the assessment year. As we discussed, if you are filing for financial year 2019-20, assessment year will be 2021. So select the proper assessment year and then download the Java tool and the instructions for the corresponding form. In this case, for ITR2, you can download the Java tool, which will be a zip file, and also instructions, which is a PDF file. Suppose if you don't have a complicated income and savings, if it is very simple, you can also try avoiding download of this tool. Instead, you can directly file it on the website. Like, you can fill the details directly in the website itself without downloading any extra tool. This is also very simple. If maybe just a salary is there, maybe just interest in salary, like typically maybe ITR1 can be easily done directly in the website. Like when we go to e-file, there is an income tax return option, and in that there is submission mode option. So there are two options for the submission mode. Upload XML for XML is one option. Another option is prepare and submit online. So for this use case, like directly filling on the website, you should use submission mode, prepare and submit online. Then it will open up the ITR form on the website itself where you will fill. For downloading tool and all, we will use another option, upload XML, that we will see later on, that we will use only at the end after filling everything in the tool and all. While uploading an XML file of the details, we use that option. But if you directly want to, let's say ITR1, very simple income structure, you can directly use the submission mode, prepare and submit online, and start filling it without downloading any tool. It can be very simple. So since we are discussing about the tool itself, like okay, download the tool for say ITR2 and the instructions PDF. On Windows, you can just unzip it and run. There is a batch file, ITR batch file. You just click that to invoke the run the tool. So which will have its own user interface. If you are downloading it for like a Mac, then there is an ITR.sh a shell script that you can invoke. And for Mac, note down that if you have Java 11, it may not run. You need Java 8 to install, and then you can change it in your terminal how to pick the Java 8. So overall, like you invoke the tool, you fill the details in the tool, then pay any pending tax through the website, then log into the website in the IT department e-filing website and upload a file called like the XML file that you download from the tool after filling all the details. That is the process. Because in the next slides, we go into the details of the tool, how to enter data into various components of the tool. So like there's something called pre-fill, like there may be some generic information that is common across financial years, like your name, PAN, Aadhaar number, bank details, like the bank account numbers and your address and all. Those things you can download a pre-filled text data and upload it directly to the tool so that you will avoid entering some of these common data. And also, like as I said, 26As will have all the tax paid information that we also need to fill in the tool. This pre-filling will include that information also, the TDS information. So you can download the pre-filled XML file from the IT department website and then upload it in the tool. So to download the pre-filled one, log into your account. Then there is a option under my account, download pre-filled XML. There it will ask the assessment year you need, like if you are filing for 1920, so 2021 is the assessment year. Select it and the ITR form, then it will give you an option to download the XML. And also note down where you have downloaded the XML, because you need to reopen it to the tool. So this is how it looks when you extract the zip file of the tool into a directory, say in this case ITR Tool 2020. So this is a Windows example. So there is a Windows batch file that I will click to run the tool. As I said, ITR.sh can be used for like Mac. So this is how the tool looks. So there are, like, at the top level, it will have the new, open, save draft, prefill, submit, preview, recalculate. Those are all the top level things, like opening for the first time, or like when you open the tool, you want to open a draft version of the filled form, or to save the half-filled form, or when it is complete, you want to save an XML that needs to be uploaded to the website, or you want to recalculate after entering every data, or you want to preview the content that is filled. So that is at the top bar. There's also submit, where you can directly submit to the website, but I'm not sure whether it works now. We won't cover it. There is an option to manually upload the file to the website that we will cover in this discussion. Then below that, there is another bar which says instructions home, general, schedule, SHPCG. Those are all different schedules of the ITR form. So in future slides, we will go through each one of them, what to fill, how to fill. So to start with, we will check about open and save draft. So note that the whatever you enter into the tool, and let's say you haven't finished everything in one go. You want to exit the tool for today and continue tomorrow. Then you can save partially, like whatever is entered. So that is called as save draft. So when you say save draft, whatever is filled till now, it is saved. But so it always saves into one file on your hard drive. Like, so you can, so when you say save draft, it will ask which folder you need to save. So remember where you have saved it, because when you relaunch the tool next time, it will not automatically load that previous data. It will always be empty. Whenever you launch a tool, it will always be empty. You need to remember where you have saved previous draft, so that you need to reopen that draft file. So otherwise it starts with empty only. So that's how you use like open to open a saved draft, and you use save draft to save it. Save is used only at the end. We will come to that. So periodically, whenever you are entering, keep saving through save draft. If by saving draft for multiple times, if the file name exists, it overwrites. So as I said, like when you launch the tool, it is always empty. So let's say you saved some draft, you exited the tool, you reopen the tool. Don't just start editing again and save, because you might overwrite the previous draft. Because always remember to reopen a saved draft when you continue by relaunching the tool, so that you have the previous data and you make the edits on top of it. Because sometimes you might have finished one schedule, saved draft into one file, then exited the tool. Tomorrow you reopen the tool, go to another schedule, which may be empty, but you won't be knowing that the previously filled schedule is also empty unless you reopen the draft. So what happens is, like, You have filled one schedule, saved draft, exited tool. Then started the tool without reopening, you fill another schedule and again resaved to the same draft file. Then it will overwrite the previous schedule because you haven't reopened the previous draft file. And also keep saving into multiple versions for these mistakes, at least if you overwrite something annoying. Yeah, this is like when you open, it will ask which draft file you want to open, and it will populate all the data. As I said, there are many schedules in the ITR form. And when you go to home tab, it will list all the schedules, and on the right side there is a selection of the schedules, yes or no. You have an option to disable it, saying no if you don't want that to be listed in the tool. So like the general schedule has the general personal information. Schedule S is related to your salary. HP is related to any house property like housing loan, rent. CG is for capital gains, like when you sell stocks, any gains or losses. And the capital gain can be long term or short term depending on type of capital gain and how many years for that type of the asset. And the details of the long term capital gain is covered in 112A schedule, and similar same thing for non-residents. The residents is the one who stays in India, like non-residents NRIs. For them, it is 115 AD schedule. OS is for other sources like bank interest. CYLA, BFLA, CFL are related to losses. Like if you have any losses for capital, like capital losses, which you cannot match with any other gains in the current financial year, you can use that losses against any gains in future years, up to 8 years in future. So those things are covered in those 3 schedules. 6A is for any deductions, like any LIC, PF. ATD is related to any health insurance, like deductions for a family. ATG is any donations you have made for deductions. GGA, ATGGA is again donation but for scientific research. AMT, AMTC are related to alternate minimum tax. That is like some hotel business and all, where there is a different set of rules, some better tax. SPI, suppose if you want to cover your spouse and minor kid income, the same returns. SI is for a special rate. For some, like there can be special rate is like something which is not related to your income bracket, like 5%, 20%, 30%. TI is like some income which can be exempted from the tax. So that we listed, even though you won't pay tax for that, but you need to show that you have so much income, like agriculture income. PTA is pass-through income details, like related to some business trust or some types of investment, like real estate investment. FSI is any income from outside India. TR is if you are getting a tax relief in some cases. FA is like if you have foreign assets, like maybe you work for an MNC and you have stocks in that company in the outside India. 5A is specific to the Goa related thing. AL is the list of assets and liabilities if your income is more than 50 lakhs. DI is the details of investment. This is specific to this year for the COVID thing, where you could have invested for tax savings after March 31st. TI is the total income. It is more like you fill other schedules so that TI will be like auto populated based on those inputs. It will show the total income that you have for the year. TTI similarly, it calculates all the tax you need to pay, depending on how much you already paid, what is pending. IT is the income tax, like how much you have already paid, like your employer might have paid through TDS. That is covered in TDS. IT is like if you have directly paid any advance tax or self-assessment tax, you might even pay now. So TDS is your employer has deducted or the bank has deducted. That information will be filled there. TCS is collected at source, that is some business related things. Most of the people it may not apply. Verification is the final part where you will enter your names. So as I said, part A, part B, IT, TDS, CV, CTOS, 6A, this applies to many. Whereas the house property or SPI, foreign assets, CL applies to some, and the other things to very few. And yeah. Note that some sections in the tool are view only. And because based on the other schedule portions where you fill, it will indirectly populate somewhere else, adding up and all, applying some formulas indirectly. Like if you fill schedule S for your salary, it will auto fill the salary details in part BTI. So also the instructions PDF that you get, read through it for all the details. So, so you have downloaded the pre-filled XML file. So when you start the tool, you have to click pre-fill to load that file. So it will populate like most likely your part A general, most of the things would have already populated. So cross-check the pre-filled data, like your first name, date of birth, address, all those details. Like address should be your home address, name and date of birth as in PAN. Suppose if you're filing for your parents, you can still give your phone and email here, even though if you have already given it for your personal plan. Also in general, so file under section will be 139(1) if it is you are filing it before the due date for filing the income tax returns. There is also something called 7th provision, that is nothing but SFT that we discussed previously. Like if suppose your income is less than the limit for filing the tax for your age group, like for everyone like 2.5 lakhs. But if you have one of these, like more than 1 crore in your current account, business related things are 2 lakhs, more than 2 lakhs for travel, around electricity bill, then only you will fill this section. B. Then residential status, yeah, if you're in India, it's resident. And also you will fill number of days you're in India, even though you have stayed the whole year in India. (115H) is if you're a non-resident during last financial year. So otherwise you will fill it as no. Also like Portugal civil code needs Goa specific, otherwise you will fill it as no. And you're most likely you might be filling it on your own, this income tax, so your representative will be no. And next one is if you're a director of a company, then only you will fill that as. And whether you have any unlisted like shares in the company. And the section 5A is filled only as we checked previously, like in the general there is a section for Portuguese civil code, only if it is S, like if you are in Goa, you will fill 5A. That is mainly, I think, to divide the whole income into husband and wife income and then file separately. Hopefully, I think maybe if the income is more than the minimum for tax filing, you might divide and maybe save taxes. In the salary section, you will fill the salary details. And also, if you have a pension annuity, like you might be getting a pension after retirement, or you have bought an annuity, which is a pension scheme from any insurance companies like LIC, and you're getting the pension, that is also listed as part of the salary section. And if suppose if you're getting pension, like commuted pension, it's once lump sum, then it won't be listed here. And family pension, like when the main person, like after their death, like when the family members get the pension, we call it as family pension, and that is not listed here as well. That is listed in Schedule OS and other sources. So in the Schedule S, it's not section S, it's Schedule S in the title below. So you will enter the employer information that you get from the Form 16, the name of the employer, and the salary information. So it's like the nature of the employer, and also like you fill this information from your Form 16. So nature of the employer, like can be like depending on whether it is central or state government, or PSU like bank, or others, like if you work for a private company, it will be others. And if you are filing the information for pension or annuity, it should be pension. For salary, get from Form 16, like there's a mapping of basic salary purposes, allowances, deduction. This maps to which section of the Form 16. For ITR 1, income salary is not gross. So you need to deduct the allowances and then fill it. And for ITR 1, you know that because we were discussing on ITR 2, this slide is just for ITR 1. So ITR 1 form will provide option to fill 6A and 80D support. So TDS. So this is like the tax deducted at source. The employer will deduct the tax when they pay the salary. Similarly, the bank. So for the salary income, like the salary, like this. Okay, let's see. Top level is the one who is deducting the TDS, like your employer or a bank, and this middle layer is like the left one is the income, like the salary from the employer or the interest from the bank, whereas right side is the TDS, which is deducted as the tax by the employer or the bank, and the salary or the interest is directly paid to your account, whereas TDS is directly paid to IT department as TDS. So in the TDS schedule, in TDS 1, you will list the TDS information that you get from your Form 16 as well as your 26 years. In TDS 2, you will fill the bank interest related information that you get from 26 years. So, and the TDS 3 applies to property sale or the rent related. So overall TDS is nothing but somebody has deducted tax from you, from the amount that they are paying to you, they deduct something out of it. So they are paying you less than what they should have because they have deducted the tax amount of that and directly paid it to the IT department. But while paying it to the IT department, they would have mentioned your PAN because they're paying it on behalf of you. So this is visible in 26 years. TDS 1 is related to salary. Cross-check auto-filled values. Also cross-check because you will fill the income, that is the item 4 from the schedule S. And also the tax deducted, you can cross-check from form 16. TDS 2, bank interest related, like from SBRFT, get numbers from the bank, statements, and FD inquiries. They cross-check with 26 years also. Note that for FDs, when you download the FD inquiries, it will showcase the interest. If you have more than 1 year FD maturity and you opted for like maturity interest payment, so even though you might not have got an interest paid to you in the previous financial year, but FD inquiry will list the interest that is part of the previous financial year. So you will pay tax for that even though you haven't received it yet. So for filing this schedule, credit in the name of self, TAN of the deductor like bank employer. 6 and 7 unclaimed TDS. Just you need to keep it as like select, no selection. 7 keep the box empty, don't put 0. 8 amount deducted, no names. No, this is self-explanatory, all these things. And property sale, if you have purchased a property more than 50 lakhs, buyer has to deduct the 1% as tax and pay it to government. Like for the apartments, normally builder do that, and they pay it to the buyer's PAN info and visible in 26A. Note that the buyer of the property won't fill TDS 3. Only seller has to fill it. But for buyer, if the tool lists one mandatory row, they can enter the PAN as a buyer with TDS as 0. For rent, more than 50K per month, tenant has to deduct the tax. So that is filled here. And TCS, like the tax collected at source. This is actually collected from sellers to buyers, which applies only to say the sellers like government, institutes, companies, and also restricted to some type of buyers from the sellers. So for most individuals, it won't apply. OS is the other source. Like examples of other source like bank interest, or tax refund, or the family pension, like when the family get the pension after the main person's death. dividend. If you have like got the dividend from the companies where you have stocks, and if it's more than 10 lakhs in the financial year overall, then you need to pay tax for that. If not, then you won't fill it in the other source. You actually fill it in the EA, that is the exempted income. So that we will cover later. But note that this is changing from the next financial year, that is 2021. So that till now there was something called DDT, distributed dividend tax. So that when the company was paying the dividend to its stock, like the investors, it used to pay the DDT directly to the IT department. From next year, they won't do that. Instead, for whatever dividend you get, you directly pay the tax at the end of the, like, as part of your income. But if it is, say, more than 5K, that 5,000 rupees that company is paying the dividend, they will deduct TDS. And also, like if you're quitting your job before completing 5 years and you have employee provident fund and you're withdrawing it, so then there is a tax on it which is covered in this schedule. So as like the dividends, interest, dividends, as I said, more than 10 lakhs thing, interest is from the bank, there is an option to mention savings interest and the deposit, the FDs. Note that for the saving interest that you get, not the FDs, you can deduct max of 10K from that for tax benefit. But while entering the value in this 1B, don't deduct the 10K, because that 10K we deduct in Schedule 6A. And 1D is for the money, property, removable property, like gifts that you get from like not from relatives. The family pension, you fill it in 1E. Note that if the primary member is getting the pension, then it is not filled in family pension. Instead, it is filled in salaries as pensioner. Also, family pension has a like option to deduct 30% from the family pension. So don't deduct that while filling in E1E, because deduction amount is filled a little below in 3.8. The provident fund that I mentioned is filled in C. In 3A, like if you are getting a family pension, find out 30% of that, how much it is, and if it is less than 15,000, you can mention that amount, or if it is more than 15,000, then round it off to 15,000 and mention 15,000 here. So maximum 15,000 can be deducted from the family pension as a tax saving. For 80G, if you have made any donations, we can deduct that from the income for tax savings. So for that, find out whether it is a government or NGO you are donating to, because there are some listed as 100%, like whole donation can be deducted, or some are 50% exempt, where only 50% of the donation is exempted from tax. Also, some are mentioned as like no limit, where whatever amount you donate can be deducted 100% or 50% based on that. In some cases, there is a max limit depending on the NGO. Where if your donation crosses 10% of your total gross income, then it is limited to only 10%. So you won't consider the whole donation. PM Care is one example of government which has a 100% exemption. Whole donation is exempted, whatever the amount you pay. And also, even if you have paid more than 10% of your gross total income, everything is exempted. Like World Vision India is one example of an NGO where 50% is covered. And again, it has a limit, like 10% of your gross total income. And you need to enter PAN in ATG. If there is a government donation you have made and if there is no PAN available, you can enter this value. Note that ATG schedule, whatever you will auto update schedule B 6A. There is also ATGGA if the donation is not to government or NGO but some research and rural development. If you have health insurance related expenditure for your family, you can use ATD. If you don't have anything, then select not claiming for self or family for both 1 and 2 in ATD. Schedule 6A is related to deductions, like tax savings related things. Like you will enter the ATC, which is capped at 1.5 lakhs, which includes investments to employment provident fund or PPF, life insurance, NSC, house loan principal, medical, ATCCC for insurance premiums, some NPS in ACCD, ATCCD, and savings interest. Like if you have more than 10K in savings bank interest, we can enter 10K here, or if it is less than 10K, whatever it is, you can enter that in TTA, that is exempted from tax. In a medical insurance, max 25K in ATD. And also interest on home loan, education loan, house and paid income. DI is details of investment specific to this year due to COVID. If you have made any investments for these Schedule 6 between 1st April 2020 to 31 July 2020, you can give the details here. Also, we'll cover something called capital gain account. Like if you have a capital gain, like you have sold a property, and if you want to reinvest the capital gain to avoid the tax on the gain, but you haven't reinvested and you still have the time to reinvest, you can park it in a capital gain account provided in many banks. And that information is also can be entered into DI if it is made after 1st April. HP is house property. So if you have any loan like the loss, which is the loss, or the rent income, you will enter in the house property. Note that you have a house property, and if you are staying there, then yeah, you can't claim or you can't. There is no income from that. But if you have a loan and all, you can claim the losses through interest. If you have a house property, but if you are not staying, and also if it is not rented out, then you can avoid showing income for the property for maximum 2 properties. You can claim that as your self occupied. But if it is more than 2 property and if it is not rented out, you need to showcase the market value as the rent, even if it is not rented as income, and pay the tax. So yeah, you fill in HP, you will fill rent for let out. And if you have let out and if you have paid the property tax for the that year, you need to fill that because it will be deducted from the income. And also, if it is let out, 30% is auto deducted from the as the maintenance. So you won't pay tax for 30%. Here also you will enter in housing loan interest that you have paid. Note that ATC in 6A covers principal, whereas interest is covered here. You will mention tenant name for let out. And if you're self-occupied, I think max 2 lakhs can be exempted the loan interest that you're paying. If it is let out, there is no limit of interest that you can claim. Next is capital gain, like capital gain or loss that incur like when you sell an asset like land, buildings, stocks, mutual funds, or restricted stock units from your employer. Capital gains account is like if you have property you have sold and if you can reinvest within a particular time period, you can avoid the tax on the capital gains. So for that duration, like if the duration will like cross over like the next financial year, you can park it in a capital gains account to avoid the tax. Pass-through income is like if you have in real estate trust, investment trust, or like angel investment, like alternative investment fund. Those things are also covered in pass-through income in CG. Securities transaction tax is STT, like for regular transactions of like your tax, your stock selling through your broker will deduct and pay the STT. And short term and long term is defined for each type of assets. If you have RSUs, restricted stock units, 36 months is long term, which attracts 20% tax. For short term, it is applicable rate depending on your tax bracket. For immovable property, more than 24 months is long term, 20% tax. Short term, applicable rate. Stocks with STT, more than 12 months is long term, which attracts 10%. On gains, more than 1 lakh in the last financial year. Less than 1 lakh, no tax. For short term, it is 15%. Yeah, in schedule CG, at the top you will fill a land or building related information, and here like A, section A is for short term capital gain or loss, and B is for long term. 2.1 is related to stocks. 3 is related to non-residents. 3, 4. And 5 is normally used, like this is for short-term capital gains. If you have RSU outside India, you will fill 5A as the total sale value, and depending on the gains or the loss, we will find out the acquisition value without indexation, and you fill that as the 5B1. Yeah, if you have parked your capital gains into capital gains account, you will fill it here. If you have real estate investment trust or AIF related gain or loss, you mention it here as pass-through income. If you have income outside India and to avoid the double tax, it applies TDA, you fill the details here. B is for long-term capital gains. And if you're applying the indexation, you will fill it BI for cost of acquisition with indexation. Like indexation is like the way is an option where the inflation is considered. So you will adjust the investment amount based on the inflation rate, so that even though you might have invested less amount in the past, but currently due to inflation that is worth more, so you will recalculate your investment amount with indexation so that it will be higher side, so that your gain will be less. So income tax department also has the cost inflation index. So you pick the CII of the original investment year and the current year where you have got the capital gains, and use those two values to extrapolate your initial investment before calculating the gains. Yeah, if you have reinvested your capital gains for tax benefit, you will enter it here. D. After you have entered your gain or loss, depending on how much, whether it is short term or long term, and whether it is which bracket it applies the tax rate, you will enter that amount in this table. Note that if you have loss, you can carry forward to 8 assessment years in future. And when you have losses, you can, and if it is a long-term capital loss, you can only set off against LT, long-term capital gain. Whereas if you have a short-term capital loss, you can set off against both short-term or long-term capital gain. When you have a capital gain, depending on when you acquired that gain in the financial year, there are 3 periods defined. First April to 15 June, 16 June to 15 September, then to 15 December to 15 March, 31st. Depending on which period, you will fill that up. This is used to find out the advance tax you need to pay that we will cover later. If you have long-term capital gain, you will fill the details in 112A, and non-residents will fill 115A. Schedule PTI, pass-through income. If you have invested in business trust like real estate investment trust or infrastructure investment trust, then you will report the gains or losses here. Note that this is not any REIT related stocks in the stock exchange, like embassy REIT. That is just part of the regular stocks. This is outside the stocks, which is registered in the stock exchange. Also, if you're investing in startups through as an angel investor through something called AIF, Alternate Investment Fund from SEBI, like through some online portals like Let's Venture, AngelList, and all, that is covered here. Cross-check this CYLA, current year loss adjustment, like if you have any losses. So this will auto calculate the final loss or the gain. If suppose there are any losses in this financial year, you can carry forward to future years. BFLA will list the brought forward loss adjustment if there were any losses in the previous financial year. So that will be listed here to adjust to the current year gains. CFL is based on the BFLA and CYLA, it will calculate is there any carried forward losses for future. Foreign assets schedule is if you, let's say you work for an MNC and stocks in foreign stock exchanges, US. You will enter those details here. Note that this is, you won't end. Yeah, if you had like RSUs outside India and you have sold in the last financial year, you will enter those details here. And if you have the RSUs vested as on 31st March, but you haven't sold, you will list that also here. Note that in TTI, there is an option asking whether you have assets outside India. You should have said yes there, so that this schedule is editable. There may be discussions whether to fill this information in A3 in FA or in section D. So here we discuss about filling it in section D. Is what to like. If you have many stocks RSUs, and you can club them based on if the vesting date is same and the same price, vesting price. You can club that into one row in schedule in section D here in FA, and you can enter multiple rows. In each row, country code and name, like United States of America, if it is US, the zip code, nature of assets will be shared, ownership is direct, date of acquisition is the vested date, total investment is the vested price, the number of shares, grouping, and also the conversion, rupee conversion at that time. Income derived. This detail is for the shares you have sold. So income derived is the income derived is the actual capital gain or loss that you have got for those shares. Because the RSUs, you will get it for zero price maybe. You won't specify the sell amount. You actually specify the gain or the loss compared to your vested amount, because you would have already paid the tax for the vested amount when it vests as part of your salary, as part of salary payment. It will be part of your Form 16 mostly. Note that if there is a loss, you mention it with a negative sign here. Nature of income is capital gain or capital. 9 is same as 7. 10 is capital gains. 11, it is A5 if it is short term and B9 for long term. So you're mentioning that you're documenting those numbers in CG schedule in either A5 or B9 section. And for the shares you're holding as on 31st March, which are vested on 31st March, you will enter again group and enter those in section D. And most of them is similar to the ones you have sold, except 7 income is 0 because you haven't sold. So 8 is NE, 9 is 0. Item 10 is no income within the year, 11 NE. AL is assets and liabilities. If your income is more than 50 lakhs, you need to fill this. Like you will cover like or the land or building that you have. Note that this is not that you have bought last year. This is all the land or buildings that you own. Like if you have not purchased or sold anything in the last financial year, then whatever you have documented 1 year back, you will keep it same. You will list the whole building details. And also you will list jewelry, the gold related, the physical gold, the worth you have, vehicles you have. These are just the investment amount, the values that you paid when you bought them. And also the bank details. Bank details is total amount worth, the bank's savings and FDs. And also worth of shares in mutual funds and all you have invested, insurance policies, loans and advances are given, and cash in hand. And then you have any liabilities you will. TR is any tax relief, like any tax you have paid outside India. Otherwise, in 4 you will say no. FSI if you have any foreign source of income. SI is if you have paid any special rates of income. Like if you have withdrawn the PF before completing 5 years of service. Like if you have capital gains short term or long term without applicable rates, like if it is like 10%, 15% or 20% thing, then you will mention that here. If you have an exempt income, you will mention that. Like if you have interest from PPF, EPF, tax saving bonds. This is only when you like EPF might be fetching you the interest, but you haven't taken it out, then you won't mention this. Only when this comes into picture when you closing that account and getting it out. Dividend again, yeah, like the last year. Anyway, you want like you have less than, let's say 10 lakhs of dividend, then you will just mention that amount here, which will be part of your income, but you won't pay the tax. And if you have any agricultural income expenditure, you will cover it here. SPI, special person income. If you want to cover your spouse or minor kids income, you can do it here. AMT and AMTC are alternate minimum tax. It only applies to some business income like hotel industry. If you doesn't fall into that category, just cross-check the amounts here, which should just reflect your regular income and tax. TI is the total income. Just cross-check, this is auto-populated. Cross-check that the income from your scheduled salary is populated properly here, like auto-populated. and also the numbers from your capital gain, house property, other source, everything is properly auto-filled here, and the sum, it will show the sum and all. So just cross-check all the value. It should have covered all the deductions, removed. Check TTI. Before checking TTI, we need to, it should have automatically calculated the tax, but make sure that you hit recalculate once again, so that everything is recalculated. Recalculated in TTI. So once recalculate is done, cross-check the total tax it has shown and whether there is any surcharge. On the particular, like the rate that applies. If it applies, it will show here. If it doesn't, it will show 0. And also the cess, how much cess comes to, and the total liability of the tax. And also it will show any tax relief information and the interest. If there is any interest you need to pay on top of the regular tax. And what is that interest? If suppose you are failing after the due, like to file it before the due date, like for 19-20 financial year, December 31st is the last date. If you don't file it before that date, 234A will apply, the fine will apply, which is covered as interest. And based on how much tax you need to pay, if based on the TDS and all the cover, if it doesn't cover 90% of the total tax that you need to pay by March 31st, there will be a penalty of 1% per month applied till you file it. Also, based on whatever is the final tax you need to pay, you should have already paid 15% by June 15th, 45% by September 15th, 75% by December 15th, and 100% by March 15th. If you don't cover that percent by that date, there will be, that is considered as a delay in payment, and 1% per month interest is applied on that 234C. So all of these are reflected in the interest portion, that is 13 section. And whatever tax paid through TDS is also reflected in section 15. Based on the whatever TDS and whatever the interest, everything, note that the 15 covers TDS, that is covered, like deducted by your employer or the bank. And assuming you never paid any advance tax, then it will be 0. If you had actively paid the advance tax, then it will, you will enter that information in the IT. So which I haven't covered till now, which will cover in the next slide. So that will reflect here. If you had already calculated and paid the self-assessment tax, that will be reflected here, but you would have entered IT schedule. But the assumption till now is you never explicitly paid tax. Only your employer has deducted TDS and bank has deducted TDS. So that is, you have already entered in TDS schedule. So then only TDS will have values here, whereas advance tax will be 0 and self-assessment tax, which is 15D, will be 0. Assuming that is the case, there is a chance that, okay, if you have your interest income and you fall in, say, more than like 20% or 30% bracket, then obviously there may be some, and you might have some, let's say, other source, the capital gains, there may be some tax we need to pay. That will be reflected in 16 amount payable. So if it is more than 0, we need to pay that tax now. So that is known as self-assessment tax. So next slide will cover how to pay that tax. Once we pay the tax, we will come back to this tool to fill the details of the amount of tax that we pay and proceed. So next we will check how we can pay that amount that is shown as amount payable. So go to the e-filing website. There's a e-pay tax on the left side. Click that, it will take you to NSDL website. So in NSDL website, we need to pick the ITNS 280 challan to pay the self-assessment tax. In ITNS 280, tax applicable, select 0021 income tax other than companies. Type of payment, select self-assessment tax. Mode of payment, debit card or the net banking. For net banking, you can select the bank name. Enter your PAN. Then for assessment year, which is the financial year +1, like for 2019-20 financial year, it's 2020-21 is the assessment year. Select it. If you put a wrong assessment here, then it will be adjusted to the previous financial year. So it won't be reflected for the current financial year that you're filing against. Fill the address. Once you do that, it will get your name for the PAN number and automatically it will populate, and you can cross-check the assessment year before proceeding to net banking website. So it will take you to the corresponding bank's website to fill the details and pay through net banking. So you log into the bank website. It will show you a web page to enter the tax amount. There can be many fields specifically like for tax, interest, surcharge, cess. If you have those split of details, like how much total, you know how much you have to pay from the tool. If you can get the details of how much is the surcharge, how much is the cess, interest and all, you might have to do that on your own. And you can fill that individually in the bank's web page. If you don't have that, you can just enter everything into the tax field and pay it. When it completes the payment, the bank page should give you an option to download the receipt. Download it and mark down the information, the three main information: the BSR code, date of receipt, which is the date you paid, and the challan serial number, because you need to enter these three details into our tool. Note that if in case definitely you should pay the advance tax to avoid any interest. So if you have that planning properly, if you know your final financial income at the end of the year and or some idea, and if you want to pay the advance tax, you can do that for the cutoff dates with that percentage. Then you can use the same paying tax page, but pick type as 100 advance tax instead of self-assessment. Once you have paid the tax, come back to the tool, go to income tax tab, which is IT. There you will enter 1 row per self-assessment payment you have made or the advanced tax you have made. So you will enter BSR code, date of the deposit, serial number of the channel, and the amount you have paid. Once you enter that, you will do the recalculation, pressing recalculate and go to TDI. Because now, since you had entered the TDI, I think section 15 would have shown you the advanced tax or the, like in this case, self-assessment tax you have paid, so that it will recalculate and it will show the amount payable as 0. If in case you had paid more, it will show the refund. In 18, list all your bank accounts. You will just list the IFS code, name of the bank, it will auto-pick it, and account number. And among that, pick one or more where you want to get the refund if you have. For 19, you will say yes if you have data outside India, like for foreign assets. So once everything is done, go to verification and fill your full name, father's name, and capacity as self. So now everything is done, so we can do save. Save will also do the validation of all the entries. And if there are any errors, it will report on the right side of the tool. If there are any errors, it will show that in the right side window. So check what is the error. It will show which schedule has what type of error. Go and fix it. You can also preview the content in one file, like click preview. It will open a file in your browser, cross-check all the values. Note that when you hit yes, save, and if there are no errors, it will ask you where to download that XML file. XML is the formatted text. So you note down where you are saving that XML file, because that is the file you will upload to IT department website. That is the final step. So it will ask you where to save the XML file. Note down the location. Also, once you save the XML, you can also open that XML file in a browser to cross-check the content. At least the values inside the tags, elements tags of the XML file. Note that maybe filling all the data might take maybe more than a day and all. So keep on doing save draft so that you're not losing data for some crashes or mistakenly overwrite. So we use save only at the end because it will verify, it will validate the content, which might give errors if it is half full. Final step is uploading whatever XML you have saved from the tool, because the XML file contains all the data that you have filled into the tool. So now we don't need the tool, we just need the XML. Log into eFiling, go to eFile, click Income Tax Return, and it will auto-populate your PAN anyway because you're logged in. Select the proper assessment here. Select the proper ITR PAN number for which you have used the tool. Filing type is original for the first time, because you might file it for any corrections and all later on. Submission mode in this case is upload XML. Another option is directly entering in the website that we discussed initially. So you select upload XML, and there is an eVerify. There is a verification step after you upload. There are one is first step is you have an Aadhaar number and you have linked with your PAN. So actually it will show your Aadhaar numbers, the 4 digits, if it is already linked. So if you want to select that option, then you can verify, do the e-verification through Aadhaar OTP. What it does is, if you select that and continue, then it will open up another window and wait for 2 minutes for you to enter an OTP. Within that 2 minutes, it will send an OTP to the mobile number linked to your Aadhaar number. So keep the window open, the website window, because it will time out within 2 minutes. So check your mobile number for the Aadhaar, the OTP, and enter that. So before proceeding, be ready to receive the OTP for your linked Aadhaar for the mobile number that is linked with your Aadhaar. There is also option to e-verify differently through, like, you can generate an EVC from bank, ATM and all. That is the next option if you want to go through that. Or if you want to e-verify later, you can also do that. Or if you can take a printout of the ITRV, which is an acknowledgement. We will see how you can download, and you can sign it physically on a printout and send it to the IT department physical address. That also you can do. So based on what you want to prepare, you can select and continue. And choose the XML file that was downloaded when you clicked save in the tool. So select that. Yeah, this is the, and submit. You will get this Aadhaar OTP window. It waits for maybe 2 minutes. Yeah, this is only if you have selected Aadhaar OTP option in the previous screen. Once you enter the OTP, your e-verification is also successful, and next step is don't log out. Instead, you can download the acknowledgement, which is known as ITRV. So go to my account and view e-file returns, because you have just filed your returns. That is the end of the return filing. So you will see all the filed returns. So if you click that, it will go to another page which will list all your previous years returns, 1 row per year. So click the row which is the latest one that you just filed. It will show another page with the download links for ITRV. Download that, which is a PDF file. Also, it will list ITR filled form PDF version. Download that also. Because ITRV is like a summary of 1 page of total income and tax paid. Whereas ITR filled form will have all the details that we filled into the tool. Once you have done that filing, you can log out of the website. You will get a mail from the department which will attach the ITRV which you just downloaded. Same file will also be sent to your email. And also after some time, if you log into the IT website and check the status of your IT return, it should have shown as eVerify. Note that this is only complete from your end, whereas they will do the processing of your IT return. They will cross-check all the values. So they might say it is still processing. Once that processing is done, in few weeks or months, you will get an SMS or a mail from IT department saying your processing is complete, and they will also, I think, attach a documents with all the details from their end, like a summary of income tax and all. They might say, okay, it is fine, there are no dues. Then that completes from your end everything for that financial year. Or they might also say, okay, there is a refund based on their calculation, you have paid more. So that is also fine from your end because you will get that refund into your account. But in some cases, if they have need clarifications and all, you will get a communication, or they might say, oh no, you need to pay some more tax because this is how they have calculated it. Then if you agree to them in the IT data income tax filing website, you can say that this is, again, you will go to that row of the financial year. Then there will be an option to say, okay, I agree with your final calculation and I will pay the extra tax. Or you can also say, no, I don't agree with you. I have a clarification to make, and also then the process. So congrats if you have gone through till now. You have filed your income tax return. Thanks for all the patience and thanks for watching. Hope this was helpful. Thank you.